Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. Indian equities take a beating on worries that the American Central Bank may slow down on rate cuts. Volatile crude oil prices add to the drag. The sensex drops over 1,000 points. The nifty slips over 1%. The rupee weakens, teasing a new record low.
There was a reason why The Economist said that it was the Everest of corporate turnarounds. I think what we've achieved in a little over 2 years is significant.
Air India CEO Campbell Wilson says Air India's revival will be the Everest of corporate turnarounds, but seeks patience. Says the ambitious plan to upgrade legacy fleet will take more time and cost more than the budgeted $400 million. Claims airfares have gone down amidst consolidation in the sector. That's a CNBC-TV18 exclusive. IRDAI is likely to have asked insurers to limit business generated via banks to 50%. This is merely a discussion at this stage. Insurance stocks decline in trade. Both Finance Minister and the IRDAI chairman have expressed concerns over mis-selling of insurance policies through the bank assurance route. That's an exclusive. Hezbollah says its hands are still on the trigger as it monitors Israel's withdrawal from Lebanon after the ceasefire comes into effect. Israeli strikes continue in Gaza. Reports suggest that the U.S. is pushing ahead with a $680 million arms package to Tel Aviv. At least 1 million people are without power supply across Ukraine after Russia's overnight missile attacks on energy infrastructure. Moscow claims to have destroyed 25 Ukrainian drones overnight. President Zelensky is likely to sign Ukraine's budget today. The document calls for the country's first wartime tax increases. The winter session of Parliament is disrupted for the third day as opposition continues to demand a discussion on the Adani controversy. Both houses adjourned after new MPs, including Priyanka Gandhi, were sworn in. The Maharashtra suspense continues even after Eknath Shinde dropped hints that he will accept a BJP Chief Minister Shinde, Fadnavis and Ajit Pawar to meet Home Minister Amit Shah in Delhi tonight. Sources tell Network 18 that the BJP is keen on keeping both the finance and home portfolios to themselves. Well, let's start with the market action. We saw deep cuts on the large street today. The sensex dropped nearly 1,200 points and Nifty fell below the 24,000 mark in what was pretty broad-based selling pressure that we saw. So that's the sensex closing 1,090 points, 1,190 points lower, 360 points lower on the Nifty. The mid-cap index closing flat, just about holding in positive territory. And the Nifty Bank also down by about 400 points. The financial stocks clearly they're under pressure. So we'll be standing by now to wrap up the market action for us. What's caused this kind of nervousness, Rupee, today?
Well, this will go down as a disappointing day for the bulls because after 3 days of consolidation and some pretty steady levels, the market kind of collapsed today. And this was a fall that was a very India-specific fall because a lot of the other markets around our neighborhood and also in Europe while we were trading, all those markets were actually up and about. But we had this big sort of incessant selling come through on the large cap space throughout the day. A lot of the bounces were getting sold into, and the net result was that the Nifty managed to break below the 24,000 level once again, and it lost the 20 DMA in the process as well. Mid-caps did fare better. The advance decline ratio was also a little positive, but the large cap selling is something that would make people fairly nervous on the street. So let's talk about where the pressure came in from all sides of the market. IT was weak, auto was weak, bank stocks were lower, and insurers were falling big time on fears that there is some sort of regulatory action or some curbs on the bank assurance channel coming forward. So that brings me to the list of Nifty losers, and you'll find stocks like SBI Life, HDFC Life on that list. M&M, Bajaj Auto, Eicher from the auto space were all lower. TCS, Infosys, HCL Tech Mahindra, all of these technology names were weak. And even consumer stocks like Titan were not spared. Bajaj Finance was among the bigger financial names that was fairly weak in today's trading action. PSU stocks managed to buck the trend. In a wide market fall, they still managed a fair amount of green, and especially these are PSUs beyond the Nifty. For instance, look at NBCC, Hudco. These companies announced order wins that really helped sentiment around them. IOB, where there are some ratings upgrades that have come through. Cochin Shipyard and IRDAI. These were all positive names in a very weak market. A lot of the Adani stocks also held up today. So Total Gas, Energy Solutions, Adani Green Power, all of them were up. Adani Enterprises managed a small slice of green. Adani Ports was, however, down about 2 to 3% through the trading action. Now, this fall kind of gets us back to the drawing board. The bulls were hoping that the market has made a base and maybe the correction starts getting into its last stages, but we don't know yet. Tonight, of course, we don't have any fresh cues from the US because the markets are closed over there for the Thanksgiving holiday. So it's back to tracking FPI flows to really see if the intensity of the FPI selling is truly over or not, or whether there is more to come.
All right, so Rupee, many thanks. That was the market action for you. But the big newsmaker this evening, Air India CEO Campbell Wilson says the revival of the airline will be the Everest of corporate turnaround. Speaking exclusively to CNBC-TV18, Wilson sought patience, though, saying that the management will need 5 years to get the airline back in shape. He also said the ambitious plan to upgrade legacy fleet will take more time and cost more than the budgeted $400 million. Now, even as the aviation industry is in the grips of consolidation, Wilson claims that airfares have in fact gone down and continue to remain affordable. Take a look.
So we committed more than $400 million to the retrofit program back in 2022. We also selected the seats back in 2022. There is a regulatory design, certification, and then subsequently manufacturing process that we need to go through. And that is where the supply chain constraint has hit us. Two different manufacturers came back to us and said, look, we just cannot deliver to the time frame that we had committed. There's going to be a delay. In one case, it was 6 months. In the other case, it was a little longer. So the program that actually should have physically started on the aircraft already will now not start until next year. The 787 aircraft, the first of the retrofit ship sets, will come in April. It'll take a few months to install and be certified. First aircraft hopefully in service by October next year. The 777s will have a refresh next year, but then go for a full retrofit starting in 2026.
So that $400 million that you spoke of, that was committed as far as the retrofit program was concerned. Do you believe you may need to now allocate more capital towards the retrofit exercise?
Well, the sad fact is yes. In one case, we've had to change seat vendors. This refresh I talk about, which is an interim step on the 777s, is something that we hadn't provisioned for originally and is only necessary because of the delay to the seat deliveries. But look, we've made this decision to invest more because we realise that this is, we can change everything else about the airline, and we nearly have changed everything else about the airline. But until we change the last 40 of our legacy wide-body aircraft to the standard that we expect of ourselves, let alone what customers expect of us, I think people will not consider the job complete, and we won't consider the job complete.
So how much more are you going to have to spend over and above the $400 million which have already been committed?
Well, I won't say, but it's in the tens of millions. The investment that we're making in turning around Air India is significant. It will take some time to turn around the airline from a financial perspective, but I think if you look at our reports, we are making very, very good progress. And so I think we always said that this would be at least a 5-year turnaround. There was a reason why we said that it will be a 5-year turnaround. There was a reason why the economists said that it was the Everest of corporate turnarounds. I think what we've achieved in a little over 2 years is significant. It's certainly not finished. We are as impatient as anyone to bring it to closure, but I think progress is occurring.
We're going through a second phase of consolidation. The last one we saw was in the early 2000s or the mid 2000s. But, what does that mean in terms of pricing power for airlines like yourself? And also on the back of the merger and the integration, what are the cost efficiencies that we're talking about? I mean, what does that realistically mean in terms of margin improvement for Air India?
Well, there's a whole regulatory and legal structure that you need to maintain if you're an independent organisation or an independent airline. There's duplication of many positions. There aren't the economies of scale that you can enjoy when you're a 300 aircraft airline. So clearly there are efficiencies, and we've realised some, and there are more that we wish to realise. And that was part of the motivation for putting the businesses together. But I wouldn't want to give you particular figures. With respect to pricing power, I'd refer you to an article that was literally just released by IATA, which traces how airfares have tracked relative to the CPI and relative to oil prices, not just in India but in many countries. And what you will find that if you index back to 2015 or 2019, airfares have gone down. And not only gone down, but gone down dramatically relative to inflation and relative to oil price. So I think just the competitive dynamic of aviation and the market will mean that airfares will remain affordable, and of course we want to fill our planes. So there's always going to be a benefit to the customer in that respect.
And you can catch my special conversation with the CEO of Air India, Campbell Wilson, only on CNBC-TV18. In global news, thousands of civilians displaced from southern Lebanon have begun returning home after a ceasefire deal between Israel and Hezbollah came into effect. Highways packed with vehicles as families, along with belongings, drove towards their homes, towns and villages. The Israeli army placed a curfew on southern Lebanon and warned people against entering forbidden areas. Lebanese military convoys also headed towards southern Lebanon. As per the terms of the ceasefire, the Lebanese army will boost their deployment in the region. Meanwhile, Hezbollah said that it has achieved victory over Israeli forces and will continue to monitor Israel's withdrawal from Lebanon. The armed group added that its fighters will continue to remain ready in case of any infringement. And staying with West Asia, Israel has continued to deepen its offensive in Gaza. Reports have said that Israeli military attacked a refugee camp in central Gaza, killing at least 9 people. Israeli forces also killed 4 Palestinians in a drone attack in another refugee camp in Khan Yunis. Residential buildings were also struck down in many parts of the war-torn enclave. From one war-torn region to another, Ukraine claims Russia launched a massive attack on the country's power and energy infrastructure. Russian missile attacks were reportedly seen across the country, triggering major power outages in cities. Ukrainian authorities have said no casualties have been reported so far. In other international news, at least 9 of Donald Trump's cabinet nominees and picks for his White House team have been targeted with bomb threats. The FBI said it was aware of numerous bomb threats as well as swatting incidents. Remember, swatting refers to the act of making hoax calls to attract police response to the target's home. A White House spokesperson has said U.S. President Joe Biden unequivocally condemned these threats of political violence. And staying with all the action from the U.S., Donald Trump has picked out his new economic team after vowing the first big tariff imposition of his upcoming presidency, targeting Mexico, China and Canada. Prashant joins us now to take us through Trump's new economic team and their stance on things like tariffs and more. Prashant.
You know, there's one thing, Shireen, which kind of is common between all these gentlemen here. You said the new team, right? But it's like the old team because they're all people who've been associated with Trump for, many years, decades in some cases, old relationships plus loyalty. I think that is the common thread here as far as the new economic team is concerned. So let me just quickly run you through the top sort of 4 or 5 positions here. Treasury Secretary, really top of the line in terms of posts which markets were watching very closely. And mind you, once this appointment came through, markets actually did rally a little bit. The understanding till that point, because other appointments had already been happening, and I'll run you through those, but the understanding in markets was that, well, it's all going to be very good for the US, but it's going to be bad for the rest of the world. With Mr. Scott Bessent, who's been nominated for the Treasury Secretary's post, who's a Wall Street veteran, right? He was Trump's biggest ally, or the biggest allies on Wall Street. He's someone who's worked for George Soros' investment firm. And he's someone who's a Wall Street insider, and that's the reason why financial markets, sort of took it very well. His nomination very, very well. In terms of his stance, he favors tariffs as a one-time adjustment. He's hawkish in China. He's also been famously critical of the FOMC. He's actually, made a suggestion that maybe they should get a shadow Fed chair, and in that sense, make the current Fed chair Powell irrelevant in that sense, although he's walked back a little bit from that position since. He's seen as a bit of a fiscal hawk. He's been critical of how the previous Treasury Secretary, Janet Yellen, used T-bills to fund the government. And that's the other point which markets like, that with him, the fiscal is not going to be a complete runaway. So that's the first one, which is the Treasury Secretary. Scott Bessent essentially is a nominee here. The Commerce Secretary comes next. Howard Lutnick is a longtime Trump friend. He's also, by the way, the CEO of the financial services firm Cantor Fitzgerald. They're, of course, they're a research house plus investment banking services in the U.S. and emerging markets as well. The Commerce Department is important under Mr. Lutnick because it houses 2 important departments. One sets duties on goods the U.S. has determined are unfairly priced or subsidized, which comes into the U.S. And also it monitors technologies and sensitive, tech which needs to be kept out of the reach of countries which the U.S. deems to be adversarial, countries like China. The other 2, the National Economic Council is number 3. Kevin Hassett is was the chairman of the Council of Economic Advisors for 2 years when Trump was president the first time around in 2016. He's long argued for tax cuts, corporate tax cuts. He sort of pushed that through in the first Trump term as well. He'll be responsible for setting the agenda on a wide range of economic policy matters. This is essentially the economic team within the White House, which is going to work closely with other sort of teams. The last one, United States Trade Representative, the USTR, Jamieson Green was Mr. Robert Lighthizer, Chief of Staff in Trump's first presidency. Mr. Lighthizer occupied this position of the trade representative in the first term, and Mr. Green has worked with him. He was essentially his protege. He's again, I mean, like Mr. Lighthizer, a China hawk. He's arguing for Congress to revoke Beijing's permanent normal trade relation status. And he also wants to impose new and higher tariffs on Chinese goods. So, I mean, I would say 3 out of these 4 are hawks, real hawks. The one person here, which is the Treasury Secretary, he's someone who's seen as, more benign in that sense, and also perhaps because he's a Wall Street insider, market friendly. The question, of course, is, it's at the end of the day, Donald Trump, who's the president, how much power and how much agency will each of these gentlemen have to decide policy? Really, or will all of them have to walk back what Mr. Trump wants to do? I think those are things we'll find out. 20th of January, of course, is the inauguration when Mr. Trump takes over. And we will start to hear on policy front from day one. We actually already are. And I think that'll pick up pace as we go along. Back to you.
Prashant, many thanks for joining us. That's the economy team under President-elect Donald Trump. Up next, a special discussion with Dinesh Kanabar, the CEO of Dhruva Advisors, on the anticipated tax reforms and the arbitration mechanism that is being considered. That and more when we return. Well, Dhruva Advisors, one of India's foremost tax consultancy and advisory firms, is celebrating its 10th anniversary. We're now joined by Dinesh Kanabar, the CEO. Our association with Mr. Kanabar and Dhruva goes back a long way. He has over the years appeared on CNBC-TV18 frequently to help us decode complex direct tax announcements and understand the likely impact. Mr. Kanabar, many thanks for joining us here on CNBC-TV18, and congratulations to you and your team on completing a decade that has coincided with many big changes as far as Indian taxes are concerned, both on the direct and the indirect tax front. Sum up the decade gone by, Mr. Kanabar.
It's been a great decade, and it so happens that it coincided with the decade of the new government, and so we saw a number of changes. But if I could just step back for a minute, Shireen, we started out as an organization trying to create a tax and regulatory advisory practice which was free from conflicts, which typically many large organizations tend to have. And it was a dream. I did not know 10 years ago as to how much of this dream could reach a fruition. And I am, of course, indeed very, very glad that in the end of 10 years, we are 38 partners, senior professionals, and 400 overall professionals, with 7 offices in India and 3 offices overseas. It's been a delightful journey, a journey where we have worked on some of the largest matters with clients, be it mergers, be it cross-border evolution, be it tax litigation, succession planning, working with the government on the advocacy matters and the like. So it's been a very, very satisfying journey, and I'm really thankful to CNBC for being sort of a partner with us in this journey, Shireen.
No, Mr. Kanabar, we wish you the very best of luck for the future as well, as always. But let's talk about the future, Mr. Kanabar. You talked about how we've seen so much happen in this past decade across each of those areas that you spoke of. What are you now anticipating in terms of the next big wave of changes? Starting, of course, with the budget. We're on the cusp of consultations, and the budget, of course, will be announced on the 1st of February. And overall of direct taxes has been promised by the finance minister. What's the expectation?
And there's a huge amount of expectation, and rightly so. If you step back, Shireen, and reflect as to what are those 2 or 3 things which can really get India into that ease of doing business mode. The World Bank Index of Ease of Doing Business has been abolished. It's no longer being published annually. But what pushed India down was really taxes and nothing else. And the question is, what can the government do? And the first and foremost is how do we put litigation behind? And if I can make 2 points at this stage, Shirin, on litigation, we have situation number one, where an appeal against an assessing officer's order today takes almost 5 years to reach the first level, at which point of time the taxpayer has to pay 20% taxes, which the taxpayer believes is not payable, and the revenue is losing out on that 80%. And that apart, if everything gets litigated all the way to Supreme Court, if the stakes involved are more than 5 crores of rupees, then we are looking at a 15-year journey before you can find a resolution. Now, I know that this is not peculiar only to taxes, but the reality of the matter is that you cannot have a situation where a litigation starts today and you see a resolution after 15 years, and then at times after 15 years you have a retrospective amendment and roll back that retrospective amendment. Mercifully, we have gone out of that stage of retrospective amendment. The 15-year is too long a time. So what is that mechanism that the government can put in place to help a speedier resolution of disputes? And there's been an active consultation. We have had several discussions with the finance minister, with the revenue secretary. Lots of thoughts have been provided, and I'm hoping that some of these are really put into place. The second issue, Shirin,
yes,
is
sir, the arbitration mechanisms, colleague Timsy Jaipuria was reporting that that's likely to be something that the government is considering. Your take on that?
Shirin, I don't know whether it will happen. And the reason I'm a little bit skeptical is that when OECD recommended global arbitration, India came back to say that taxes is a sovereign right and we cannot cede our right to a third country. That obviously was an arbitration where any Indian dispute went to a third country and the government rightly does not believe that arbitration is a right course. Here, of course, we are looking at arbitration within the country. And the question is that can there be an arbitration? In fact, rather than an arbitration, Shirin, I would call it a settlement mechanism. And I can give you a very concrete example. You are famous, and you and I have chatted a lot on the Vodafone controversy in India. Around the same time that the Vodafone controversy happened in India, there was a similar controversy in UK with regard to an acquisition which they had made in Europe. And there was a demand raise of about £4 billion, and it was settled for £1.5 billion, where both sides came back to say, we don't know where this is going, how long will it take, what cost will it entail, and why don't we settle down? Now, that's the most pragmatic way. And we have actually tabled some of the papers to the government on how we could implement it. Also, in the direct taxes code, which was drafted earlier, there are several mechanisms which are provided. It'll be very, very interesting to see where this goes.
Yes, will be very interesting. On those other aspects that you brought up, Mr. Kanabar, both cross-border as well as M&A, what's the expectation, given the fact that India's role and relevance in this new geopolitical framework is also significantly changing? What's the expectation over the next few years?
On the M&A side, really, the way the law is drafted, probably it leaves a lot to interpretation. And the funny part, Shirin, is that sometimes when you go back to the government and you say that here is an interpretation of the law. Is this what you intend? And the answer is no. Could you please clarify? And those clarifications have not been forthcoming. And my recent interactions give me a lot of hope that we are indeed being heard. I can give you just one very simple example, Shirin, without making it complicated. If you are looking at a listed security and you acquire, say, 30% of a listed company, then you are obliged to make an open offer. And that open offer is open for a period of time. And only after the open offer is done, that you can consummate the transaction. Now, between the point of time that you transacted to buy the 30% and you actually consummate the transaction, a period of 4 or 5 months has gone by which point of time the share prices have moved very considerably. And a literal interpretation of the law would make a person who has acquired the shares liable to tax if the price has moved up in the meantime. Now, is that the intention? The answer is no. This is an anti-abuse law. So there are a lot of clarifications which are required. These are not disputes. This is not where a taxpayer is seeking a concession. What we are seeking is can things be clarified so that we don't have litigation.
Well, Mr. Kanabar, we wish you the very best of luck, sir. And of course, we will look forward to having many more conversations with you as we approach the budget and, of course, the big day itself. But congratulations once again on a decade to you and your team at Dhruva. And we wish you the very best of luck for the future.
Thank you,
Dinesh Kanabar there of Dhruva Advisors. We are going to take a break here on Business 360, but don't go anywhere. The news continues right here on CNBC-TV18. We're back in a moment with more.